All right, Shaq, thanks. Coco's going crazy too, but we'll get into that in a minute. So you know what else is going crazy, folks, is stock market. Let's take a look and wrap up the week that was. I'm joined here on the floor by Lee Munson, Chief Investment Officer, Portfolio Asset Management, and Dave Darst, the Chief Investment Strategist at Morgan Stanley Smith Barney, the guy with more business card prints than anybody ever.
Thank you.
We'll start with you. Seniority first. Tell me, Dave, I mean, we're having the best week for stocks that we've seen since a trough in March. A lot of people saying thin volume, summer, you know, whatever, that we're going to get maybe give it back next week.
Matt, the bullish to bearish ratio is right at the same level it was March the 9th. That's 27% bulls, 54% bears. So this pullback that we had, this 7-8% sell-off that this week has now reversed, is basically the sentiment is still very negative. Valuation is not the key determinant. The key determinant will be earnings. You look at IBM, you look at some of the drug stocks this week, you look at Google this week, the earnings have come in nicely and the guidance is coming in nicely. What management is talking about, they're sanguine, constructive, positive about the future. Intel is another one. So we like the market here and could see it run some further.
So is this a bull and a bear, Lee? What are you thinking after this big run-up we've had?
Well, you know, if we close positive on the NASDAQ today, it's going to be 8 days straight. That's only happened 4 times in the last 16 years. Yeah. I've been very bearish throughout most of the year, but I've changed my stripes. Last week, I got fully invested, got rid of my hedges, I covered my shorts, and this week, usually I sell into the strength. I've been doing that, but I'm looking to buy some quality, some stocks, a little bit of beta, and, you know, some diversification.
So you think there's some follow-through ahead for next week?
I think so. You know, we had a head and shoulders formation happen last week, but it violated that technical pattern. So as a bear, I have to respect the violation, that head and shoulders. Yeah. It suggests that we're going to go back up.
Dave, you know, if we take a look at all the things happening in Washington, Nancy Pelosi, Speaker Pelosi was out again today, talking of the president yesterday, healthcare. It's a giant, expensive beast that even the CBO has said is going to not cut costs.
Matt, 100% correct. I think the fact that it's run into some sledding is another thing that's helped the market lift. That was a cloud hanging over that. I think who's going to pay for this, and it's going to be a lot bigger than people thought it was. So I think the scaling back of expectations, the scaling back of the uncertainty, that's helped the market lift as well. It was the same as earlier this year. You had nationalization, bonus clawback, and punitive taxes. And when those moved away, that was as important as green shoots. That was as important as the stimulus, stress tests, and all that other stuff. And this is basically a reduction in the size of that cloud outside, which was the size of this healthcare. Good
Is
point.
Nashville sneaking out? Did you hear that? I heard it. Is it Memphis or Nashville?
Nashville.
All right. Let me ask you another thing, too. You know, a lot of the story today, at least in earnings season so far, has been the top line miss.
Right.
I mean, that's not good. I mean, it's you know, full respect to the managers who can do what they can do and do what they can control and manage the bottom line. But ultimately, you got to grow those revenues.
Well, you know, over 60% of the earnings, I mean, they beat the estimates, but sales are down on the majority of what's been reported. So, you know, I think you're going to see some weakness in retail, but overall, I think we're going to, you know, we're going to rise here. I think that we're going to recover next year, and I think that people have to be cautious. They just have to buy quality and start getting rid of those junky companies in their portfolio.
And you mentioned it earlier. You're going quality. And you and I differ on what quality is.
So I said quality. I said, you know, I like eBay. I think it's a quality, you know, tech retailer. I like Heinz. I think most people would say that's a quality company.
Okay.
And I think Bank of America, which we squalled on.
Yes.
But, you know, I would say if you own a Huntington Bank share, you own a Key Corp, I think that's the crap you got to get rid of. And yeah, we can argue over a beer about Bank of America, but I still think, relatively speaking, it's a bellwether, and I think it's going to last.
All right, we got to run, guys. Thank you very much, Dave Darst. Always a pleasure. Lee Munson,
Thank you,
appreciate
Matt.
it,
Thank
and
you.
we'll continue our quality discussion. So, what do we got? About 45 minutes until the close here. Can't look at the clock on the wall, but the Dow is still clinging to a little bit of a gain. 18 points. The S&P can't turn positive. The Nasdaq is too close to call. We will continue to take a look at it. Also, you know, next week is going to really get busy on the earnings front.